Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today, in a series of our budget conversations, we are actually bringing to you another conversation, a conversation with an industry veteran. He's no stranger to our show, and also he's no stranger to all the market cycles. Let me welcome our guest today, Mr. Chakri Lokapriya. So, welcome to the show.
Hello, thank you so much for having me. Always good to be on your show.
Um, Interesting time, or like always, we talk around the budget. We also talk around that budgets are no longer a significant event, but they definitely are a significant event from the perspective of how actually institutional investors they look at the year ahead, because they get to hear from the government what the government is looking to do over the next year, where they're putting their money, which sectors they want to allocate more. Are they actually investing in capex or more in terms of social spending and so on? So it's more about getting the idea from the blueprint from the finance minister, who is going to present a record six budget this time. So from historically and for this budget, how much importance do you give to this budget, given it's a vote on account, an interim budget, not a full budget because it's an election year, but how much significance it holds for you?
These are all good questions, and I agree with you. It's likely to be a vote on account budget, and we'd see a continued policy thrust on capex as well as social spend in terms of an increase in rural income. And I think the country is in great shape in terms of the fiscal deficit. Is if it's likely to be maintained about that 5.8, 5.9 fiscal deficit figure should be fine. And a capex increasing by about roughly, let's say, about 18 odd percent. This continues to strengthen the case of Make in India and Atmanirbhar Bharat because manufacturing industrials will benefit. At the same time, rural will also benefit because for any infrastructure spend, usually the construction workers, many of them come from rural areas also, and therefore their income is likely to increase. And second, specifically targeted at the farm sector, maybe we can expect an increase in the farm income from around the 6,000 to the 8,000 mark. So I think so industrials, manufacturing, social spending towards farm, and a maintaining of the overall fiscal discipline around the 5.8 mark. In summary, I think is what we are expecting.
Right. So, higher income again, basically from the perspective of farmers. Given what actually we have seen in the monsoon, this time monsoon has been below the long-term average. I said there have been some words around expectations, perhaps of still a difficult monsoon, maybe for this year. Still early stage, more guesses. But from the rural economy perspective, because we have heard some cautious signs from the FMCG companies also in their commentary when we're hearing the results from them. From that perspective, what do you expect from the finance minister apart from increase in the farm in the income for the farmers?
Very good points. And one is because it's because of the monsoon-related effects. Some direct companies like the fertilizer industry, agrochemicals, those have been impacted. And the FMCG companies, which usually see that uptake on a good monsoon, has not happened. But on the other hand, a huge increase in capex towards infrastructure, railways, all these have basically increase the demand for construction workers and various
Yes.
kinds of workers, which has helped support the people living in the rural areas, and therefore while the direct farm beneficiaries have not have kind of suffered, that is likely to continue for another couple of quarters. But I think some amount of maybe direct subsidies like this farm income increase is coming their way. So overall, I don't think we would change our portfolio stance, i.e., we will continue to maintain industrials, manufacturing, utilities, because utilities is a big thing, and utilities also helps the farm big time, whether it is in coal mining or whether it is in power utilities. In the supply chain, farm rural background people benefit.
Before I go to manufacturing, from the perspective of infrastructure, what infrastructure, I would say, sectors, subsectors, or stocks, like where actually you really are expecting a sort of big benefits? Because if I remember last budget, railways continues to have a huge allocations, and that has we have seen a result as humongous order books now for the railway companies, associated again sort of benefits percolating to different subsectors. Also, basically from the perspective of the road companies or the other ancillary suppliers, they all actually are having multi-year order books. So, how actually we should be reading into this if there is an increase in capex for both railways and infrastructure?
In the railways, you raised a very good point. Because railways has changed quite dramatically from the previous budgets. One, if you look at the amount allocated to railways itself has gone up. Second, the outlook of railways now is with Vande Bharat, with Metro, is also coming under somehow somewhere in the railway spend, or that is the companies. If you look at Titagarh wagons, Jupiter, all these companies, now they're not, in the past, they used to just make railway wagons supplying to the Indian Railways. Today, they're making brand new railways for Vande Bharat. They're making brand new with advanced technology for the metro. They're getting into the ancillary, which is a higher margin business. Plus,
Yes, signals, breakings, everything. Yes.
absolutely. And plus, they're getting into the export market, something which they never did. Of course, with all these various things has resulted in a huge order book. The stock prices have done fantastically well. Because they've done so well, I think the pace of growth, for example, Titagarh Wagons is up something like close to 10 times in the last 2 or 3 years. But still, it's not an expensive stock. It still only trades at about 28 times for a phenomenally big order book. So I think railways is still a good space. Defense, same story, but I think there are more opportunities to pick. And in the regular infrastructure, I think roads has been kind of weak, and that will probably pick up companies like Nagarjuna Construction, who's also diversifying away from just roads and getting into smart metering, which in the utilities industry.
Right, makes sense. From a manufacturing perspective, PLI has been a runaway success. What do you expect from the government in terms of support or in terms of new focus? Because we have seen sort of focus on mobile manufacturing, then electronics manufacturing, perhaps deeper into the component ecosystem that could be coming up now. And then also, are you expecting more sectors, apparel, toys, or any other sectors to get included? How are you looking at that?
Yeah, absolutely. In terms of PLI, has worked wonders for the Indian manufacturing industry. Electronics is beginning to come in. Companies like Avalon, Keynes, while they have kind of not done so well in the recent past because they have a big export book, which has been weak to the global weakness. But they will all benefit due to manufacturing in the PCB area, which will benefit them. Keynes did an QIP recently, which will bolster it, want to expand in the PCB areas. So that will help for companies like that and Dixon in that space. And I think overall, if you just rewind back, probably 2007, the market cap was 95% of the market cap came only from the Nifty. And now, from 2007 to now, Nifty represents only about 40 or 45%. So half the market cap from the journey from $1 trillion when it was in 2006 and 7 to about 4 trillion, $3.5 to $4 trillion now, has Nifty's weight has come down by half. So all these new companies are coming about, and which is a good thing because it's broadening the market.
Right, and from that perspective, what's your own sense? Which sectors you're looking for from the perspective of budget push or sectoral push? And also, should we wait for the July budget, or you are expecting some incentives for the sectors to come in this budget?
The incentives that are already provided will continue to benefit these companies, renewables, energy. So in the large pack, you will have companies like NTPC, which has a utility company, has doubled over the last 1.5 years. And still, the valuations are very reasonable. It's going to expand its thrust not just in thermal, but also in renewables. So that's on the large companies. Second, suppliers too, the companies like Sterling Wilson. Now they're the EPC guys. They have both domestic and international order book. Solar panel prices are crashing. So that'll increase the pace of rollout of in the case of renewables. So they will benefit. So I think you have, and then of course you have the financiers, companies like Power Finance, REC, who finance both renewables as well as thermal.
Is it a very good time for the financiers? Because of late we have seen the financial companies do really well, including IRDA, the recently listed company. And we are hearing now, we heard from the Prime Minister the new focus on the rooftop solar. And again, we are totally habitual with this. The aim is not small, it is almost 10 million households. So, what do you make out of that? Because for sure, I think there is going to be coming something on this in this interim budget.
Yes, and this again ties in with the rural and the smaller towns. When you're having this 10 million households having solar rooftops. Now, that contract, I think REC is the primary beneficiary. You mentioned IREDA. IREDA, the stock has gone up like 5, 6 times from its IPO time. Its valuation has gone to about nearly 2.8, 2.9 times book, which is not expensive, but it's gone up quite a lot. On the other hand, company REC still trades at only about 1.2 times book, even though the stock has gone up 2 or 3 times in the last 1.5 years. Power Finance, which owns 50% of REC, has also gone up a similar percentage, maybe about doubled in the last 1 year, but still trades at about one time book on FY26 and beyond. Now, they are very large companies, PSU companies, and their loan book is towards mainly towards government lending, so which means NPS is not a risk. Their balance sheet is very strong, and new initiatives like the solar roofing, which actually REC is the primary beneficiary. Well, these stocks will, even though they've done well, valuations on their side still will do well.
But in the past, the issue had been actually of the state governments, where actually they had delayed payments, and because of that, all thing happened. But this time, are you seeing like books are absolutely clean, and that's why these stocks actually are looking quite undervalued?
Their books have been cleaned up, from the, if you rewind back 2008 when the Supreme Court had cancelled coal mines. As a result, a bunch of utilities went bankrupt, as a result of which the loans given by REC Power Finance turned into NPAs. From then 2008 to present, they've cleaned up their balance sheet, strengthened their balance sheet. The laws and regulations have changed about how the states electricity boards have to pay back on the various loans taken. So the overall environment itself has become stronger. And second, now that their balance sheets are strong, and I think they've grown wiser from the past, what has happened. And if you look at their current NPAs, are close to zero or very low. So the clear indication that their balance sheet is still very, very strong.
Okay, that is something which perhaps is exciting, including the solar EPC companies, and perhaps we are going to look at the renewable area. From the perspective of automobiles, perhaps FAME scheme extension could be a sort of a normal expectation. But are you expecting anything apart from this for this sector?
I think autos will continue to, and auto ancillaries will benefit from the PLI scheme. So companies like Motherson, Samvardhana, Motherson, they will clearly, and actually, in fact, hopefully the battery companies, while they have been quietly working in the background, I think, eventually, obviously, they will have to take a center stage and as the move to lithium happens. And the traditional mainstream companies, whether it is Tata Motors or TVS, Tata Motors in the four-wheeler, they have very good plans, priced at least 10 different products in the EV space, in the four-wheeler segment. In the case of TVS Motors, they have extremely strong EV lineup. And continuing to take market share. So I think auto ancillaries will benefit from the move towards the EV space.
Well, very interesting. From the perspective of fiscal deficit and the growth, like tax collection numbers have been quite robust. GST collection numbers have been quite robust. Um, Now, suppose if in the budget there is a tilt towards social spending because of election year, Is that something which is going to make you worried, or like is going to be taken in the spirit? And I'm also asking you from the perspective of, because you handle all the foreign investors, so I'm
Indeed.
asking you from that perspective also.
Oh, thank you. Indeed, if you look at, as long as the number is somewhere between that 5.86% ish fiscal deficit, the markets will view it kindly. The country's balance sheet has dramatically improved if you rewind back from a few years to now, post COVID as well. And then if the tax collections are and both GST and regular tax collections have dramatically improved. You can see the per month collection, which is showing increased productive activity, tax collecting activity among the industrials, and you're seeing a lot of caps. So I think around, I don't expect much. It'll largely be in line around stated numbers of around 5.86 range.
Right. One question will be very pertinent with what you do, and I know you have a deep understanding of how AIFs operate, how AIFs get structured, what is sort of a mechanism from the perspective of taxation. There has been a demand from the industry to the finance minister from the perspective of taxation pass-through structures. What do you expect from an AIF perspective from the finance minister?
Hopefully that demand is met. It is, but given that it's a vote on account budget, that will probably be saved for a later date. Is the way I read into it. But of course, if it passes through, that would be very welcome for the industry.
Right, and why that is being asked, and I'm asking from the perspective of viewers who might actually try to understand it.
Simply because if you look at the capital gain structure in the case of the mutual fund, but this can be set off at the mutual fund level, and therefore, in the hands of the investor, they benefit from a lower tax. Now, in the case of an AIF, there has been some amount of ambiguity, but in the case of there is a certain amount of what do you call capital gains that can be set off against the capital losses. Therefore, the final returns in the hands of the holders is comes to there is a greater clarity, and therefore almost no further tax has to be paid because the tax has been already suffered at the AIF level. So that is something which happens in the mutual fund industry. So having a level playing field is something which is required.
Right, and any view on the equity and debt classes? Perhaps that could come in the July budget, but any view around those further rationing of taxation? Because we have seen some progress being made in the last budget. Are we fine right now, or you expect more sort of rationalization?
Uh, See, I think as long as the current, as far as equity is concerned, the 15% and 10% numbers are kind of very important to be maintained with no tinkering around, because equity versus debt, equity is the risk capital with the entire capital that can be lost by an investor, and therefore a lower taxation to compensate for that loss. On the other hand, fixed income is there is no up, higher upside or lower other than the promised return, and capital is secured depending upon the credit rating at which the debt is issued. And so, but again, so if the debt tax, there is a rationalization reduction, it would benefit the final investor. But equity, I think at best, it should be status quo.
Right. So those perhaps are some interesting sort of observations. Apart from that, from the perspective of holistically, in your own conversations with investors across USA, Europe, I know you actually move around both places. How actually they're looking at India, and also from a election perspective, what's the mood around the investments? Also, what's the mood around uh, from the perspective of positioning for the long term perspective?
Good questions. Now the foreign investors basically over the last 1 year have been impacted as far as investing into India have been impacted by two factors. One is the rapid rise in interest rates in the US, in UK, and all across Europe. And so that impacted their real rate of return of investing into an emerging country. And because meanwhile, rupee depreciation also impacts their overall return. Now as we go into 2024 US elections and inflation peaking out, and if hopefully as the US starts cutting interest rates, then I think my FPI investors will start making an inroads back into India. And as far as the political stability, I think India is today looked upon very positively in the international markets, and that is a good thing. So I think going into next year, hopefully we should expect to see inflows as the rates are being cut globally.
Okay, as we close down, last question, perhaps my favorite one. If you want to pick up any two major factors which are looking towards the budget, what would be those two factors?
I think continued stability in its capex thrust and maintaining of fiscal discipline. These two things, as long as the status quo, markets will take it very kindly.
Okay, and we'll watch out for these two headline numbers and again actually try to get in touch with you again post budget. But with that thought, thanks a lot, sir, for coming on the show and giving us all the insights on what you're thinking right now.
Thank you so much for having me, and thank you all your viewers.
And dear viewers, with that, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.